Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 trending tech stocks. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at 3 stocks in the technology sector that have been trending lately. That means they've been picking up a lot of attention and new ratings from Wall Street Analysts. So we're going to take a look at these companies, what news recently has them trending, and of course how those Wall Street Analysts are weighing in on the stock's future. Now we found these stocks using the TipRanks Trending Stocks tool. This is found over on TipRanks.com under Research Tools and Trending Stocks. Here you're going to see companies that have been trending either the last 72 hours, 7 days, or 30 days. Today we're looking at the last 72 hours and taking a look at the technology sector. I'm then sorting my list by ratings in the last 72 hours because we can see the stocks that have picked up the most attention. And our first trending tech stock is ON Semiconductor. Their stock trades under the ticker ON and is currently priced at $108 per share. Now they have taken a jump up here yesterday. It's currently up nearly 6% in the past week, and the stock has seen impressive growth of 70% in the past year. The jump up in their stock price this week came yesterday following their earnings report, where they did come out with an earnings beat. For their Q2, they reported revenue of $2.09 billion, which was flat year over year, but did come in $70 million ahead of analysts' expectations. While their earnings per share came in at $1.33, coming in 12 cents ahead of analyst estimates. Other highlights included record automotive revenue exceeding $1 billion and increasing 35% year over year, and their industrial revenue of $609.3 million increased 5% year over year. Looking at management's commentary on the recent quarter, they said that given our progress in Q2 silicon carbide revenue growing nearly 4x over last year's quarter, we remain on track to achieve our first $1 billion revenue year and remain on track to have more than 50% of our substrates coming from our internal production by the end of Q4. Following that earnings report, we have had 18 analysts reiterate price targets in just the last 2 days. And we do have a mix of buys and hold ratings coming in for an overall moderate buy rating with an average price target of nearly $118. Taking a look at the recent ratings here, many of these analysts did increase their price targets. One analyst raised their price target to $125, noting the strong results and above expectations on the future guidance, and saying that they were encouraged by their robust results. One analyst who did keep their hold rating but increased the price target did say that the results were a solid beat and continue to impress investors, but that the stock is currently trading at a valuation premium relative to their peers. Looking at our detailed ratings here, we do have some low-end price targets with holds, downsides of up to 7.8%, even a buy rating with a slight downside as the stock has surpassed that price target, and then others ranging around that 15 to 21% mark. For our second trending stock, we're taking a look at ZoomInfo. Their stock trades under the ticker ZI and is plummeting today, currently down 26%, going below $19 per share. And ZoomInfo has had a tough year. They're down 49.9% overall. And of course, their stock's recent plunge is related to their earnings report. Now, they did come out with a beat on earnings, but missed on revenue. For their Q2, they reported earnings per share of 26 cents, which did beat estimates by 3 cents per share. Revenue came in at $308.6 million, which did grow year over year, but did fall $2.5 million short from expectations. And that alone maybe wouldn't have been too bad, but the company did also cut their full-year earnings and revenue guidance. They decreased the range for their full-year adjusted earnings by 1 cent, and for their full-year sales, they decreased the range by a few $100,000. And in reaction to this, we do have some analysts downgrading their rating on the stock. One of those being Brad Zelnick from Deutsche Bank. He said that the company reported disappointing Q2 results that suffered from further deterioration and downselling within the technology customer vertical. The firm is concerned by management's persistent lack of visibility and says the stock's multiple has a downside risk. One analyst at RBC Capital also lowered their price target, noting that retention rates were also disappointing at ZoomInfo as downsells were worse than expected in June, especially from software companies who already reduced spending a year ago. But despite this gloomy outlook and many analysts lowering price targets, we still have a bunch coming in with buys. Overall, the stock has 13 buys and 5 holds, with an average price target of $27, and that would be room for upside potential of 42%. Of course, that is helped by the stock's big decline today. And we can see many of those buy ratings still coming in with some lofty price targets just today. One analyst from Wells Fargo who did maintain a buy rating noted the potential for a turnaround as macro impacts subside given lowered estimates plus lagging performance, but acknowledges the timeline now likely pushes into 2024. And our third trending tech stock is Arista Networks. And their situation is a bit opposite from ZoomInfo. Under the ticker ANET, their stock is up nearly 20% today, currently trading around $185 per share. They have seen growth of 58% in the past year, and we can see that nice jump up today. And of course, this stock is also reacting to their latest earnings report. They came out with an easy earnings beat and reported record revenue. For their Q2, they reported earnings per share of $1.58, coming in comfortably 14 cents ahead of analyst expectations. For revenue, it came in at $1.46 billion, which was an increase of nearly 39% year over year. Arista Networks now said they also project full-year growth of over 30%, which is a good few cents higher than analysts have been projecting. In their earnings call, management noted that their AI strategy and platforms are resonating well with their early customers. Presently, in Tech 2023, they're in the middle of trials for their back-end AI networks, leading to pilots in 2024, and they expect larger clusters and production deployments in 2025 and beyond. Following this report, we do have mostly buy ratings coming in from analysts with just a couple of holds. Overall, coming in as a strong buy with an average upside just shy of 4%, as obviously today's growth has eaten up a lot of that upside potential there. Now, one of the hold ratings does come from Morgan Stanley, and they noted their hesitancy towards upgrading Arista to a buy, being the risk of anniversarying very strong cycles and the premium that investors were willing to pay for the decelerating growth. They did indicate that they are seeing a slowdown, but aiming for at least double digits next year, and Arista is showing the resiliency of the model and a more diversified customer base than in the past. Meanwhile, Wells Fargo increased the price target on their buy rating. They said that the firm believes it's still early in AI network opportunity and cites Arista's enterprise strength and double-digit growth expectations into 2024. Looking at our detailed list of analyst forecasts, we do have many price targets around that 7.5% upside with a high-end price target of over 20%. So there we have 3 technology stocks that are all trending with Wall Street in the last few days. And of course, we have some varying reasons here, both positive and negative. So let me know your thoughts on these stocks in the comments down below. And what do you think of how they're reacting to these earnings reports and their future growth potential? I always love hearing from you guys. Keep in mind, these videos are never a suggestion to buy or sell any specific stock, just showing you what those Wall Street analysts are up to and providing some information and entertainment. So please make sure you always do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.